What's going on, guys? It's the Dividend Bloodhound here with an investing update. Today I am talking about what has literally just happened in the market sell-off. It has been a ridiculous day for the markets. The Dow Jones is 1,000 points down on opening. It's absolutely insane. 1,000 points dropped just like that. My stock market portfolio on free trade literally was at £220 up and went down to zero. I was literally from 200 to £10, £200 up to £10 up in literally the first 10 minutes of the market opening. I've never seen anything like it, anything fall so quickly. It's absolutely ridiculous. I've now recovered a little bit, so I'm £30 back up, but for going from 220 up to only being £30 up, and the market only opened literally 2 hours ago, that is absolutely ridiculous. We've seen across Europe today that the Italian stock exchange was 6% down, at 6% of its whole value just gone out the window within a day's trading. And this is obviously due, if you've seen the news, that they've had a massive outbreak in the northern regions of Italy of the coronavirus. As well over 200 people will definitely go up within the next few hours. This will go exponential. There'll be people going down left, right, and centre with it. There's well over 200 people infected. A seventh death has already happened due to this, due to the outbreak. And this is unusual, really, because up until now, the virus has largely been contained to China. But nobody that's not really been Asian or of Chinese origin has died from it. But these people that have died now are Italian, and that's what's obviously, because they were infected in Italy, that's what's caused this massive ripple effect across not just the Italian stock markets, but across the global stock markets. And I've taken a quick look at my free trade app. I literally just spoke about it being down so much, but anything that is linked to China is down. So 3M, one of my major holdings, is 6% down. I've lost £30 on that almost immediately. Boeing is 5% down, but I think that's largely due to other factors. Shell and BP massively down. I've lost 30 or 40 pounds on my Shell position as well, but I think that's because of the global slowdown in oil demand. Because China, the world's the world's second biggest economy, isn't using as much oil as it should be at the moment, and that is although that's a good thing potentially for the environment, that is a big worry for us as investors and for the rest of the world, because this has such massive knock-on effects across the world's economies. Now, Apple as well. Just think at how big and strong Apple is as a company. Its share price, when I last checked, had tumbled today to below $300 a share. That is a big drop in just a couple of hours of trading. Carnival Cruises as well. That's a big holiday company, a big travel company. I bought in at the last coronavirus. I wouldn't say scare, but the last big shock to the market. Carnival Cruises dropped in price then, and I bought in then. And yet, even my position that was already at a discount, I've already lost at 12% on that. So I bought in at £31 a share when it used to be up by like 35, 36 pounds. And today I've just checked and it's down at like 28 pounds, maybe even lower than that. Now, the big things to look out for now is China. China is putting a huge amount of its wealth into its economy. That is almost what is keeping the Chinese stock exchange afloat at the moment. Otherwise, there'd be an absolute huge sell-off, and their stock market would be in free fall. So to stop this, the Chinese are just pumping money into it, capital left, right, and centre. So if you actually look at where the Chinese stock exchange is, there hasn't been a big correction yet. That their market is still sort of floating okay. But just keep a big eye on that, because if that money that the Chinese are pumping into their own stock exchange dries up, or if it dries up or it gets reduced or they run out of it or whatever, then there'd be a massive correction in their stock exchange. Now, obviously a lot of people are talking about a bear market at the moment, which is already something that's in the title of this video. Now, the bear market can happen instantly, but most people would think that it would happen over a longer period of time. Today is obviously a red day. Stocks are going to be tumbling left, right, and centre all over the place. But how long this will last, we don't really know. Last time this happened, it only fell. The stocks only tumbled for about a day, maybe 2 days, and then they sort of bottomed out and then started to recover again. This one, now that the virus is on mainland Europe, this could be a really big, longer bear period for the market. So today is definitely a write-off, definitely a bear. But I would expect that the same thing will happen now for the coming couple of days that we've got coming up. There's been for the rest of the week at least, maybe even the rest of the month, and the recovery might not quite be as quick as we saw last time. As we've seen, there's been a global sell-off across the world across all the stock exchanges. The Italian economy stock exchange has been massively affected at the moment, obviously, and then because of this, that's had a knock-on effect across the European stock exchanges, including the London Stock Exchange, which is what we use. And now we're seeing, or what I use, should I say, because I'm British. But now we see the effects going across to the New York Stock Exchange, the Americans, and then this will wrap right round through the Asian stock exchanges and come back to the Chinese and the South Korean and the Hong Kong exchanges. And we'll have to wait and see and extrapolate what happens when they all reopen later on today or tomorrow. And the major key facts to take away from this outbreak in Europe is the EU has what's called the Schengen zone, which is a free trade area, so you can wander around in Europe as much as you like. That is part of being in the Schengen zone. So coronavirus landing in mainland Europe is a big problem, because people can just go and wander and do whatever they want, and you might not even know that you are a carrier of the virus, but yet you're walking around infecting people here, there, and everywhere. That's going to be a major problem for the authorities to deal with. Like I said, we've had this outbreak in Italy, which is already up at 200 people, and 7 people have sadly died. The Austrians and on the Italian border have already closed their border to Italy, saying that we don't want anybody coming in from Italy because of the risk of infection. That was late yesterday that they said, right, that's it. No more trains, no cars over the border. And they're even on about getting the police and the military involved to enforce that, which is like sort of unusual. I don't know I'm not really sure where the EU would sit on that and what the rules are, because I'm sure that national governments can take charge of their borders in an emergency if they really have to. And this obviously is an emergency. We do not want this virus spreading anywhere, because once it's on continent Europe, which it obviously already is, then it can just spread all over the place, and especially if people don't know that they are actually carrying it. So at the moment in Italy, they've isolated an area that's got some 50,000 people in it, through using the police, through using probably the military shortly, if you check on the news, to try and contain it to that. But whether that will actually happen or not, or we will just have to wait and see. But I would stand by, if this carries on expanding and gets bigger and bigger and bigger, stand by for further like corrections to the stock market. There's other cases spread all around the world, as it is, as you've probably already seen. There's that cruise ship in Japan that's got people from all over the world, many different countries all around the world on, and they've all been getting it left, right, and centre on board, because they're isolated on board, but on board they're not really isolated from each other as much. They're all touching the same things and whatever, so that's quite bad there. And that's where the British cases, there's 13 British people have got coronavirus at the moment. They're all people that have come back into the country from elsewhere and are now being cared for or quarantined there. So obviously we're waiting to see what happens for that. Hopefully that doesn't break out into the UK and obviously start infecting people in the UK. Otherwise the UK stock market could end up in the same sort of state as the Italians. So globally now we have at least 80,000 cases of the virus. But when you think about that compared to the world's population, that actually isn't really that many, and the mortality rate is still really low. But the trouble is for these companies that are grappling with this, like your Apple, your 3M, your Boeing, your Shell, or whatever, their production has been stopped. There's only a limited amount of iPhones that have been made. Let's say, I'm just going to use iPhones as an example, and most of it is made in China, and yet most of the Chinese factories are shut. There's going to be a ripple effect and a knock-on effect all the way through, which is obviously what people are most concerned about, and which is why Apple stock is going. No, it's not in free fall because people will buy it, and Apple has got so much money in reserve, it's absolutely fine. But people are noticing, and they're starting to flee to safer money, exactly like that, Tyrone. Bonds, definitely. People are going towards where the money is perceived to be safer. So you'll see, as we've already seen, precious metal stocks going up and up and up. I think gold is at a record high today because that is where people are hedging their bets and flying to safety. Bonds backed by the UK government or the US Treasury or any sort of government with a national bank or institution, that is where your money is at its safest. It won't earn as much, but it is safe should a bear market properly take hold and the stocks enter a free fall phase. That is quite good for some of us dividend investors like me. I get it. I feel for the people with coronavirus. Wouldn't wish it on anybody. Definitely feel for the people that are sadly dying from the disease. But it represents a big opportunity for dividend investors and people that are looking for an opportunity that you can actually get hold of some of these stocks at a fair price instead of paying, at the moment, especially in the American stock exchange, you're paying a bit of a premium usually for American stocks. But now, especially with what's taken place, you are going to get these stocks at what a lot of people, or what Warren Buffett would say, is a fair price. And we need to just watch out to see how far this infection in Europe goes and keep an eye on it as investors, because if it carries on going, the markets are going to react to this, and bonds and gold will only get higher and higher and higher, and stocks will tumble in the meantime. The one thing that I will say is, although these companies are going to struggle in the short term, the mortality rate of coronavirus is actually quite low. Only 1% or 2% of people that get it actually end up dying from it. And if you extrapolated that out across the whole world's population, that would be a terrible amount of people, absolutely terrible. And obviously that would be awful. But you would think that it would be contained in it would be contained in some sort of way, so not the whole world's population would get it. But that is I don't want to say a good thing, but if you compare it to previous viruses, like the SARS or MERS, where the mortality rate was more like 8, 9, 10% of people that got it passed away, then that really would be trouble, massive trouble, even more so than it already is. So you don't want to incite panic, because that's what this is almost. People are almost just bailing out because they're just seeing these bad headlines and what's happening. And it is an area of concern, but at the same time, you don't necessarily want to just launch all your stocks out the window and put everything in gold just because of a few headlines, when there is potential for this to be contained. And even if it does get out, it's not going to kill loads of people. The problem is if things aren't being made, they aren't being sold, and people aren't buying them. I've saw numerous photos today of big shopping malls in China that are completely empty. So there's big shops of like Gucci, Louis Vuitton, all these designer brands that should be absolutely coining the money, and yet they're completely empty. So they're making absolutely zero money whatsoever. iPhone's not being made. Eventually, Apple's going to get to a certain point where their reserves are sold, and there's going to be a backlog of people waiting for their iPhone to arrive, a product that they've paid for. And what are Apple going to do? They're still going to take money off people and then just say, right, you're on a waiting list while we wait for manufacture in China, while China's still trying to deal with the virus outbreak. I don't understand. I don't really understand how they're going to get around that one. They will have to, of course they will, and they will obviously find a way. But yeah, that is my big issue with that one. South Korea, just thinking about localized to the area, to the Asian area. South Korea's got 850 cases in it on itself, so their stock exchange is also going to be hit. There's a lot of big companies that are in the South Korean stock exchange as well that you might want to think about watching on for when they bottom out, perhaps jumping in. It is like a real shame that it has come to this, but there is always opportunity in something that's obviously quite bad and quite sad for a lot of people. I'm not quite sure what the mortality rate for the people of South Korea is, but it is a very wealthy country, so hopefully a lot of people who do get it obviously aren't going to pass away from it, because they should have the healthcare system in place. And the one thing I do want to talk about, which will obviously cause a massive market correction if it happens, and I'm just going to say this early, I haven't heard this on the ground. Please don't take this as gospel or anything like that. I haven't really seen any news articles on this yet. But obviously this year we've got the Japanese Olympics coming up. And obviously Japan's proximity to China is very, very, very close, obviously. And Japan does have its own cases of coronavirus to worry about. So it'd be one to think about, that if it got to the point where the Olympics were postponed or cancelled for an extended period of time due to coronavirus, I think you could see a massive return. Like, if we do recover from this dip and bear market today, if that announcement happens due to another outbreak, or the outbreak just becoming a pandemic, or being upgraded from epidemic, which is now, to a pandemic, then that's when we're going to see a real big shock to the market. As if this isn't already a big enough shock, a real jitter to the market, where there could be a big correction involved, and a bear market will come, and it will stay for quite a while. Now, to deal with that is a good thing. Warren Buffett is quoted on a few internet articles that I've seen, that a bear market is great for us dividend investors, because you're getting your stocks for much better value each time the market drops. Obviously, you don't want it to just capitulate completely and your stocks have no residual value. But the cheaper you get your stock, as long as the dividend yield and the dividend payout stay the same, that's good for you. At the end of the day, that is good. It's in purely selfish terms, and that's obviously sometimes what it is, especially when it comes to money. That is good for you. The lower the stock, the lower you can pick up a stock price for, and the yield and the dividend remain the same, the higher your yield will be, and the better yield on cost you will have, and the better, especially in the long term, this will be for your portfolio. So just keep a watch out for the future, what happens with the Olympics. And I'm going to wrap up this live stream shortly by saying thanks to everybody that viewed my live stream. Let me know your thoughts in the comment section below. I'm going to actually list this on my YouTube channel. Please do let me know what you think of today's news, what it means for the rest of the world as a whole, and where we could potentially be in 6 months' time or so. Thanks for viewing this video, and I will see you again in the next one. Catch you later.